Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates. Various pieces of the geopolitical chessboard is moving. First, US were working with Iran for a possible oil deal, but now there is a shift toward a deal with Venezuela. Israel is striking Hezbollah targets in Lebanon, while senior US officials have been doing a to and fro travel between Israel and Arab countries. On the other hand, Russian president will be meeting with the Chinese president. This is just the geopolitical game going on. We have Mr. Powell's speech on Thursday to pay heed to along with the US retail sales data. Good morning, JK. A lot going on in the markets, yet things seem calm, somewhat calm yesterday on the currency front. What's your take?
Good morning, Swaraj. Yes, it's very clear that nobody wants an escalation in the war, and more importantly, markets don't want a war. And so the people who matter, the global leaders are actually making efforts towards the same. And Biden, of course, is also visiting Israel, and this is more to express the solidarity. But I think their reports indicate that they are working with the other partners in the Arab region to ensure that the situation does not escalate, and possibly putting a restraint on Israel's reactions to the unfortunate happenings on 7th October as well. Now, interestingly, Putin is visiting Beijing, and the first official trip of the former Soviet Union leader. And this is interestingly, I recall that China and Russia declared no limits partnership in February 2022 when Putin visited Beijing just days before he started the Ukraine war. So I would look at interest, what transpires, or rather what comes out after the meeting, and whether it is geopolitics or some other economic understanding. Of course, one should be aware that Russia is currently in a far worse economic situation than they were in 2022, and it might well be about some partnership between them on the trade as well as financial support. So yes, the other big thing is the US and Venezuela possibly moving towards a deal in which the US uses oil sanctions and Venezuela holds elections under the international supervision. But these are actually stop and start things that keep erupting now and then. Whenever oil prices go up, either you have a talk of Iran oil deal or a Venezuela deal, but eventually so far nothing really has happened. So these are possibly signals to the OPEC and Russia that this is possible, and if should the prices increase further and become a global issue, then these options are always available with the US and other countries to explore. So I would be sure about it only when actual deal is signed. Yeah, overall it was a day of relief for the stocks and currencies, as no fresh escalation was reported during the day, and investors resumed watching the economy and the earnings report, and that was good so far. While no major escalation was reported on the war front, investors seem to believe that the diplomatic efforts will prevail on further worsening of the situation. In fact, what caught my eye was one of the Fed members, Mr. Goolsbee, telling Financial Times interview that a fall in US inflation was not just a blip. Also, Mr. Harker reiterated that the Fed should not increase the rates. But this has not stopped the yields from rising again. Now, yields had come down on safe haven buying of US treasuries as soon as the war started in the Middle East. But yesterday, we have seen all the tenors seeing higher yields, and particularly in the 10-year, it gained by 7 basis points, 30-year by 9 basis points. So the underlying trend is not changing. And you see, the basic theme is that investors are asking more compensation to hold long-term paper due to factors such as persistent inflation, rising US fiscal deficits, and increased government bond issuances, with interruptions coming only with factors like war. So bond yield trend has not changed. It was only interrupted by the war news. On the stocks, again, they gained strongly as market war news was taking a back seat, and earnings report garnered more attention. Earning reports so far have been encouraging, but a lot is yet to come. The three major US indices advanced nearly 1%. more in a broad rally that favored economically sensitive, sectors. European stocks and the global equity indices also gained. Of course, this was before the Asia. This was after Asia showed a decline, with particularly Japan losing 2%. So Asia has been more sensitive to the war news, and but the advanced countries have actually not shown much of a reaction. Sentiment also improved on the report about US Venezuela getting into a deal. And on the currency front, no major moves have happened, but important to see that dollar gains have been limited in the last few sessions, and we have seen the sterling gain a bit on the basis of some of the statements from UK officials saying that market has been oversensitive to the recent inflation number from UK, and possibly they become far too short term in looking at the data on, and also on BOE rates, indirectly indicating that BOE may not be done with rate hikes. So on the Indian side, of course, even a larger volatility of up to and beyond 1% in other currencies has been able to move the rupee only just by 10 paisa or 0.15%. That speaks volume for the kind of non-volatile period that we are in. Again, not much influence from global factors, including the war situation and fresh rise in oil prices. Now, interestingly, forward premiums have dropped by more than 12 paise, or that is from 1.52 to 1.43, due to heavy receiving interest from state-run banks, reportedly managing a large position maturing shortly. We could see some near-term dollar shortage, and hence the demand due to the same, but does not look like a sustainable factor. We've also seen the implied option volatility on 1-year USD INR options drop to fresh 15-year low of 4.4%, which again demonstrates the non-directional and stagnant spot exchange rate. Low forward premium and low option vols should encourage importers to take cover for near-term payables at a relatively low cost. Finally, a small positive news for India, at least for now. That is, the Russian oil imported by India have been getting increased discounts of nearly $10 per barrel, as the state refiners have mounted pressures on the suppliers and reduced their intake from Russia for a while. So that's some relief for the trade deficit, which can have some positive impact. Overall, again, a steady market in India is expected, but the stocks are having their own journey of not really coming down at all, and that actually is a reflection of India's growth potential and the positivity about India by investors, not reflected in the currency, of course. Thank you.
Thanks, JK. And Putin visiting Beijing and Biden visiting Israel. So a lot of things happening on the geopolitical front. Yields once again started rising in US as investors start asking for more premium for holding long-term premiums as inflation gets edged in and long-term expectations rise. There was no major moves in currency. Dollar gains have been limited in last few sessions, and on the Indian side, we continue to trade in a very tight range, while forward premiums have dropped by around 12 paise. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.